And today, Thursday, April 30th, last day of April. Last day of April. Overall assessment, not a bad month. Wasn't good, but it wasn't bad. Story of the morning is going to be Google earnings. Google, Amazon, Microsoft, Meta. Pretty much two out of four. 2 out of 4 are good. So 2 good, 2 not so good. Google up after hours, about $25, now trading $376.19. Amazon as well up after hours, trading at $271, up about $8. And up about 3% after hours. Google up about 7% after hours. And then you have Meta, which was quite a disappointment. That's getting slammed pretty hard. That's down like $50. That one trading at 609.20, down about 8%. And then Microsoft down a little bit, down about 1%. All of which, I have to say, I'm no real surprises here for me. As I mentioned, I kind of expected Amazon to kind of be in the range. I actually didn't expect it to be up this much, but I did expect it to be in the range. And again, saying that, where they could actually show a significant amount of growth. Now, I didn't go and look at their earnings. Overall, I really didn't care. I don't really care. But I did not look inside the numbers at all, like where the growth came from and that sort of thing. I would believe it mostly came out of AWS, right? And then pretty common theme is going to be, raise CapEx, right? Everyone's going to be raising CapEx to spend money on AI, right? Like, oh, shocker, here's a hyperscaler. Here's a fucking cloud provider. Let's just call them that. I don't want to call it. I'm tired of that fucking term. It's a cloud. They're a cloud provider. That's what they are. They're not a fucking hyperscaler. They're a fucking cloud provider. Same thing with Google. Two of which I kind of expected, if there was going to be somebody or one of these companies that had the potential to blow out to the upside, was going to be Google. And it's only because not only is Google's revenues based on their web services, it's also, they have so many other things. And I think that was I kind of expected all the moves that have happened. Outside of Meta, I didn't think that they would get hit this bad. But they did. And nothing you can do about that. And so there you have it. And so now, the earnings quadfecta is over. Jerome Powell did the mic drop. And I think what I think is actually really interesting about the Jerome Powell thing. And look, I don't know. I feel like I'm not going to say I'm middle of the road, but I mean, the amount of people slobbering all over this guy, I think is just fucking ridiculous. I mean, he's just like every other person that's been in that position. They're all a bunch of fucking power hungry, egotistical scumbags. I mean, no matter who it is in there, and no matter what their demeanor is, and no matter what their dictation is, and their delivery, and and the amount of things that I'm seeing, like, oh, he's such a nice man. It's like, yeah, he's a really nice man, right? He was fucking completely late on everything to do with inflation. And then he was saying it was transitory. And then, inflation went out of control. And then, inflation began to what we believed was starting to get under control. And then out of nowhere, he starts cutting fucking interest rates, even though inflation was still high. And then he was saying, oh, yeah, it's justified. And it was literally right before an election. Like, really? Come on, folks. I mean, give me a break. He's a fucking scum. He's a hack, too. And I don't care that he fucking argued with Trump and then they tried to investigate. I don't care about all that. He's just an opportunist scumbag, just like everybody else that's been in there. And just like the next guy, there's already people who fucking hate him because who he's appointed to. You know who appointed this guy, Jerome Powell, was Trump. Trump had him appointed. So, I mean, just like get your fucking head straight. He's just a scumbag, just like everybody else in there. No love lost. Peace out, goodbye. Oh, I'm going to stay a governor. Yeah, I knew that. I knew you weren't going to go anywhere. I knew you were going to stay there because you're a fucking egotistical fucking scumbag. That's why. And you come out with that nice guy, he's so nice. Fuck off. Get the fuck out of here. And then the minute the fucking camera, he walks off, and he's probably like, yeah, these fucking stupid assholes. I do think it's interesting, though, that there's I think there was 3 or 4 governors that dissented, and it was the first time since 1992. There was the first time since 1992 that there were that many dissensions on rate decisions. So that should tell you there that, him piecing out here and leaving, that there were people that weren't real fucking happy with him internally. Anyway, so who cares, right? Good riddance. Another political hack gone. And now we'll get a new political hack. and our interest rates are still too high. So anyway, that's kind of the story of the morning, and it's got the NASDAQ kind of, those two stocks and having their weightings be pretty high in the NASDAQ has got the NASDAQ up pretty big this morning, up about 0.5% or 0.60. We were banging highs out last night in the overnight session, at 8 o'clock, 9 o'clock last night. We were just crushing highs, here, and just kept crushing highs. We've backed off since. But we were just cranking out the new highs last night. It was pretty interesting. So that's kind of the story of the morning. Now, where it goes from here, I don't know. Do you get kind of I would even call it almost like a relief sell-off, I would say. Into the open, it's maybe likely. You have to figure most folks are, most of the market in general after these earnings are relatively long in the tooth and probably want to unwind some things, especially now that we're banging on new highs here again. And anyway, just something to think about. Now, I did not get into the Microsoft trade. I did get into Google. I got into the Google trade we talked about yesterday. So if you want to know what that is, go look at it. Here it is. It was an Iron Condor. I had the 400, 405, 325, 330, and then in Amazon, I did the 235, 230, 295, 300. Both of those are actually going to come in pretty nicely today because we didn't really blow out the range, and at least where I'm at in these, and we should get a good volatility collapse today in both of those names. Now, I did not get filled on Microsoft. I tried, and I couldn't. I couldn't get filled in Microsoft. It kind of pissed me off, and I did play with it quite a lot, but they were not filling shit last night. I tried right before. I was literally 5 minutes before the close yesterday trying to get this, and no matter what I could do. And then I usually get to a point where I'm just usually like, F it. I'm not. This is the trade that I was trying to do. But I'm usually like, F it. They don't want to fill me. Have a nice day. I don't care. I'm not going to sit there and beat my head against the wall to try and get filled, because I just say to myself, hey, look, if they're not filling me at or around mid-price on this, especially with this kind of volatility in here and the market being what it was yesterday overall, I'm just saying to myself, look, there's nobody on the other side that wants to take these, because everybody is probably doing similar trades, right? The market always kind of senses what in the hell is going on. And so I was like, you know what? It's probably not meant to be. And so I kind of let it go. It is going to be interesting to see if this volatility does collapse today. What I would like to see in a Microsoft today, and just looking at this, you can see this volatility is extremely high. I mean, for the most part, historically, Microsoft generally runs about a 20 or a 30. You could see about a 20 or 30 volatility. And the fact that it's actually up in the 90s and even banged it into the hundreds at one point is very interesting to me. So I'm actually going to be watching Microsoft on the open. I'm already in a bunch of stuff in Microsoft that I'm kind of getting my arse kicked in a little bit. But I'm going to see if I can do, what I'm thinking in Microsoft, and I'm not going to go to May. I'm likely going to go to June. And I do have a couple of June calls. What I may do in May is I might lean into I'm looking at maybe leaning into a couple of I don't have enough left. I'm looking at leaning into a couple of 400s, man. Maybe like a 400, 490 put spread. I think they're going to come in. I think you're going to be able to sell this for much more. I think you'll be able to sell this probably for like 350 today. But you're going to need to do it within something you're going to need to do in the first 15 minutes, because you're going to want to catch this sale before all the volatility is kind of sucked out of these. It's kind of one of those hard plays, and that's where I'm going to go today. And moreover, what I may do today for Microsoft is a little day trade on some slightly in the monies puts, and try and sell like a 420 put today as a day trade. Look to get in the first 15 minutes on this, and then get out of this sometime this afternoon. And then what I'd be looking for is kind of a little bit of that's not way too much money. What I'd be looking for here is trying to take advantage of some of this volatility collapse, and then Microsoft having a little bit of a bounce after earnings, because the fact that it's down like near $10 or so, it didn't get hammered the way Meta did. Meta got hammered. I would stay away from that one. I wouldn't do a trade like this in Meta, because I don't know if you're going to get the bounce. You likely may get another wave of selling, and you may even get that here in Microsoft as well. You may even get that, but I'm looking at selling this probably for like $15, and I'm going to sell it naked. It is going to be a bit of you're going to need to do it in a margin account. It's not going to be for everybody. Because you can see like this is not a margin account, and you're going to use 40 grand. And in a margin account, you're likely the margin hit on this is going to be about I want to say it's about 5 or 6 grand. I don't have margin anymore with Tasty Trade. I got away from it. And my reasoning is they're kind of a little bit of scumbags on margin. They are. I've never really had any problems with margin with a firm. I know Schwab has been great when I've gotten into, and I've never really getting in margin trouble. But when I get in trouble is when I get assigned, and then I have to do all kinds of stuff like sell stuff or send money or whatever it is. Usually I just sell shit. But when it's happened through Schwab, it's been very clean that they will call most of the time and say, hey, look, you're in, blah, blah, blah. You need to sell this. And all right, yeah, fine. Tasty Trade, I didn't get a fucking phone call. No fucking phone call. No nothing. No nothing. Just, oh, your account's in fucking violation. You need to do something, whatever. And look, I understand they got thousands of customers, but you know what? Like, I don't know. I don't know. And then, and then one time I was not near my computer and when I was with Schwab and I was like, oh, wow, that's great. Thank you. Can you do it for me? And they're like, yeah, sure. No fucking problem. And they did it. Now, I thought if that same thing happened with Tasty Trade and they didn't fucking call me and I was away from my computer and I couldn't, I may have turned out that my account would have been in violation. Right. And then I don't know if you're aware that when you get a violation, it's kind of like a strike against you that, and I believe you only get like one. I think you get like one. That's it. And, I was thinking if that happened in Tasty Trade, I'm like, that's fucked up because then, and then I'm fucked, and then I might get the account might get it restricted. And I'm like, screw that. So I got rid of my margin there. Again, I got a lot of beef with this company now. Again, their platform is great for trading options and stuff. Anything else, it's fucking garbage. It is absolutely fucking garbage if you don't do if you do anything else but options. If you do a lot of options, yeah, it's fine. But for everything else, it sucks. So anyway, I'm actually looking to sell this. I think it's about $5,000 in a real margin account. Again, I don't have one here. I'll probably do it in my Charles Schwab account. I don't want to bring that up, though, because it does kind of kill my system when I have two things run at the same time, two platforms. But anyway, that's what I'm going to be looking to do. I'm going to look to sell these 420s. I know they're a little in the money, and then I'm going to look to buy them back. And I'm going to be looking for a bit of a bounce here in Microsoft because I'm not totally like disappointed in their earnings. I mean, they were a beat, and I think where they kind of missed on the earnings front was probably likely like in the guidance type of thing. And I didn't read the blurb here, but I'm sure that's more than likely what it was and how their miss on OpenAI and all this other shit. It's like you kind of figure it. You know the headlines. If you've been watching it, you know what happened. And so that's that with Microsoft. And so that's how I'm going to play it. I would not do the same thing in Meta. This move down. This is a pretty bad move, and they are continuing. It's down 9% now. They are continuing to smash this. This will likely even go down further after the market opens. So that's it. That's all kind of going on in stock world overall. Nothing else. I think tonight, if you're looking at earnings, it's going to probably be about Apple tonight. I think there's probably something you could do in Apple. I think out of all the tech stocks, I think Apple has been probably the kind of steady Eddie out of all of them. Even though it really hasn't gone anywhere, it hasn't really collapsed, and a lot of the moves down have turned out to be pretty decent buying opportunities. And it just kind of just keeps on trucking, man. You even look at it on the chart, and Apple just keeps on a freaking trucking. You see through all of this, we've gone basically nowhere since October of last year. Highs of 288, lows of 240. So basically a little $40 range, and it just kind of keeps on trucking. And if you were to buy any of these dips down here that were, under 250, you're actually doing okay right now. Is it sustainable? I don't know. Given the fact that Microsoft kind of laid an egg here, but Google and Amazon, there's a quite a possibility that Apple has a decent earnings cycle and maybe not blows it out of the water, but stays within the range. So that's what I'll do. And I'll actually play that range and do like a 250. I wouldn't even mind doing it. I wouldn't even care, even though they're looking at a $13 move. I wouldn't even care about doing a 260, a 250, doing a $10 wide, skewing it a little bullish, even though it may actually blow. Maybe they blow out, maybe they don't. And then selling something up in the 290. 300 area. I kind of like that spot. And the reason is, and it's relatively tight, and I get it, and it's completely skewed to the upside. My take is I have a decent position in Apple as it is, and being short calls up here at 300 really isn't going to hurt me that much. And and being a little bit inside the range here, if it does kind of dip down, the fact that these are in May, I can always roll them and kind of keep the dream going alive and, play it that way. And so I know it may be a little tight, but I'm going to bring in a decent amount of premium in here. And also, I'm selling a pretty nice piece of volatility, keeping May, and I kind of like this trade here in Apple today for earnings, and that's really about it. That is really about it as far as Apple. And now, one other way you can play it in Apple is to maybe go out a little more in time and kind of get away from the volatility. But if you want an earnings play that's more probably palatable for most folks, because I know a lot of people just don't buy into the iron condor thing. I don't know why, but they don't. They only feel confident in buying calls. So if that's the case, I would go around the 250s or 255s even, and I would do a calendar spread. I would do like a 255 August, June calendar spread. 255, 260. 255, 260 calendar spread in Apple. To me, that's probably not a bad space to be. You're in the money. You likely have some potential for this to get, for this to fall and be out of the money. But, pre-earnings, and if they come in and they even lay an egg or it goes down a little bit, you're in good shape in this one. And then you do have quite a bit of time. You have till August. And then you also have the capability to roll this sucker anywhere you want over the next couple of months. And so that's why I kind of like that one there. Now, it is going to cost you a little bit of money. It's going to cost you about $900. But, that kind of trade to me is like what I would do for earnings if you're looking to do something a little less complicated, I guess. I mean, it's not a straight up vertical spread. It's considered a diagonal calendar spread. And the reason it's diagonal is if it was a pure calendar spread, the strikes would be the same, right? Pure calendar spread are the same strikes, different expiries, right? This is August, this is June. A diagonal calendar spread is different expiries and different strikes, hence making it a diagonal. So anyway, there's some terms for you there, and I don't know what the hell just happened. But so there's that one, and that's another one that I would do. And look, if you want to get a little more, if you want it a little cheaper, you're going to have to go out of the money or go closer to the money on this if you want this to be a little cheaper, right? Actually, it's not much. But so anyway, with that being said, that was kind of the play there in Apple. So a little calendar spread as well. And that's the only earnings play really that's worth anything right now. And what the hell just happened? What happened? Yeah, that's the only one worthwhile. I mean, I don't trade Bristol Myers or TAP or Conoco, Baxter, Philip Altera. I don't trade any of these for earnings because they just generally don't move much to do them on earnings. And so, and then, next week, it looks like we have a bunch of oil stocks now reporting next week. I see Pfizer on the list, but again, none of these look very interesting. PayPal, possibly, I don't know. I've never really had much success trading PayPal on earnings. It's always been it always bites me in the ass. But that's really it for tonight, in my opinion. I mean, Clorox, none of these. I mean, big names, decent IV rank, but these are not really what I would consider stocks that I usually trade earnings on. So anyway, that's it. As far as that front goes, let's look into and look at some of the futures. The story in the NASDAQ is going to be the same as the story in the NASDAQ. There's not a lot of there. You want to buy the dips, by all means, go ahead. To me, it's just not... it's not been a good trade. The only place you got to go in the NASDAQ here is to sell these highs or just buy and close your eyes. And that is not for me. Other than that, I don't really see any space in here where, maybe if we get back down in these 2,700 level, but look, any of these marks on here, even if you're trading pivots, I mean, they are far and away from where we're at right now. I mean, the only one that's even close here is maybe 2,700, 2,400. But a lot of these are very up and far away. And even as you start to grind in, the levels don't really get much better, even on the shorter time frame. And now we're looking at, possibly these 27,328s, maybe 27,351s, but again, we're still pretty far away. And then to the upside, you're looking at basically the, selling the all-time highs. There's really nothing in here that going to signal a reversal somewhat. Again, I don't know. And so that's kind of what's going on in the NASDAQ. So there is no there. As far as the Russell, a little different. You're definitely going to want to mark this area, these 2750s. 2750s all the way up to 2753s. I think that area has been very difficult. This is on a 5-minute. That area has been very difficult over the last 24, 48 hours or so. We got multiple touches up there, 1, 2, and 3. And so, just something to be aware of, that the Russell's having a lot of problems getting through there on the short term. As far as the downside, I don't really particularly like anything in here. I think, we've been range bound in here. I think if you're looking to trade this, you're going to want to stay on the edges. Yesterday's lows, 27.30, maybe not a bad spot to start looking if you're looking to get a long here on a bounce. And then, the next spot is going to be somewhere in here, 27.27s or so. And then that's going to be where you're going to want to look for a possible bounce. I'm not going to play around inside the middle here. It just hasn't been a good, you can see here, just looking back, it hasn't been a real good spot. They've kind of like sliced and diced you and chopped it apart. And so stick to the edges. And play it that way. Gold having a really, really big bounce today. It actually has needed it. It's been down and down. I mean, this is probably the biggest move to the upside that we've had in a bit of a while, and not just a big move, but a sustained move over a period of decent amount of time. I mean, a lot of these rips have just been getting sold pretty hard. And so this is actually a pretty interesting bounce down here. Here's yesterday's lows, 45.22, trade 46.43, up about 1.8% today. I don't know. I think gold would be off the even though I traded gold pretty nicely last night. I got a couple of nice shorts. I don't know if I would actually even play it to the downside today. I would kind of, I don't know, personally, I'm going to just sidestep gold and, you know, sit this one out today on gold. I don't see, unless you're already in, you miss the boat. And that's kind of how I'm playing it, that, you know, look, I missed the boat. And we are, you know, making a really nice move. I mean, you may want to even mark, maybe you mark 46.71 as maybe an engagement point to see, hey, look, we're at R3 today. Maybe you do give it a look. Do we get a reversal? Doesn't look like there was one there. There's an hourly chart. It doesn't look like there was one here. And that the only real reversal area is well above 4,700 here back up. And you can see I got a ton of alerts set up there over 4,700. So, and then if you drill in, here's a 30-minute, here's a 15, here is a 5. There'll likely be a something here. We did get a little reversal up here this morning. Early morning. When was that? That was it says 6:30. So that was actually right after the open. So anyway, that and again, I'm not really. I wouldn't be a fan. I mean, this would be the overnight highs. These are the highs from yesterday's open at 6:00 p.m. I don't know if I'd really be a fan of that, but I'm going to just, to be mechanical, I am actually going to just set a couple here for possible engagement. You never know. We get back up there and possibly... Oh, this was 6:35 this morning. So this was 6:35 this morning. And I don't know, maybe we get up there. Again, I just feel like I missed the boat on this. If I wasn't engaged in this at 6:30 this morning, I probably wouldn't be taking wouldn't even look to take a short. But I'm going to mark it because it is a swing high here from this morning. But anyway, that is really it. And then again, all the other levels are up well above that in the 4,700. So to me, it's like gold is kind of off limits today. There's nothing really sticking out here for me that's saying like, yeah, all right, this is good, this is bad, kind of like indifferent. So I'm just going to sidestep it. Let's take a look at soybeans. Actually down a little bit. It's actually been down all night. It really hasn't. It actually gapped down overnight, and it hasn't really budged much. From here, I see corn is up about 9 handles, up almost 2%, and then wheat is down about 1.5%. So it looks like the little inverse correlation between buy wheat, sell corn is kind of going on today. I don't really see any there. I do have a bunch of alerts down here at 1183 that I'm watching that I would step into a long down here if we do get down here. And I likely won't even be looking at shorts at all in here. I'm actually looking to get long if I'm going to do anything, and I'm going to continue that bias. But that's kind of my spot is 1183 in the beans. And then the story is that crude oil did get up to 110 overnight. We have backed down quite significantly, down 2.5% already, trading at 104, but big move down last night. We'll see what happens with crude here, and if it does continue to fall, I don't really think these higher prices at this level are sustainable, quite honestly. I think there is, again, this is just my opinion. I think there are a lot of market forces, and I don't think it's just news cycle at this point. I do believe that there's a lot of market forces that are doing everything they can to try and keep this crude oil up and above $100. And it's obviously having a lot of problems because, if we were really going to stay up here in this range, we would stay up here. And it seems like every time that we get a big rip, we get a huge, huge sell-off. And it just tells me that there's a lot of speculation going on, and that the speculators are actually driving this market, and it's really not the news cycle or what's going on. Because I really have to say, look, overall, the market overall doesn't give a shit what's going on over there. I mean, in fact, you got the NASDAQ at all-time highs. You got Google blowing their earnings out. That thing's up $25. You start looking, underneath it, under the covers at a lot of stocks. I've seen Caterpillar's up big today. There's a lot of things that are going on in the market that just make you scratch your head and say, is really oil $100? You got to remember, oil is a very extremely manipulated market. And, again, these just in my opinion, I just don't think I don't think these prices over 100 are sustainable. I think the price of crude oil right now needs to be around 80 to $90. I think it goes to back, if it comes back in here and, we're back at 80 or $90 again, it's going to kind of tell you what really is going on over there, and what's going on over there really isn't impacting things as much as everybody's making it out to be. The market is finding a way, folks, and that's kind of that should be the takeaway right now. What's going on over there is that the market is slowly finding a way to be fine without Iranian oil. So anyway, be it as it may, that's what's going on in crude, and we'll continue to keep an eye on it. And I have no skin in the game here other than I have some oil. I have some USO puts out in October or September that I'm kind of betting on this thing collapsing, but that hasn't turned out. But that's about it. That's all I got. Fairly short. How am I? 38 minutes, not bad. More stock news than anything, right? Futures are kind of suck. And then we'll just wait on Apple earnings tonight. And as I said, I think Apple is going to be a good one for earnings, for an earnings trade. I'm not expecting them to blow out. I'm not expecting them to blow up. But I do think it'll be a good earnings trade. And we'll see how things kind of roll here. Because, now that I'm looking at a lot more stocks lately, I'm starting to see that a lot of these software companies that were kind of making amends and watching all these fucking jackasses on, financial news and everything else. Oh yeah, we're buying it. There's value. We're buying these fucking software. It's God, shut up. We know why you're buying those, because you can't fucking buy anything else. You can't buy anything else. That's why you're buying these, because they're big companies. They're big companies that have a history, and they basically fit the portfolio, or they fit the description of what you can hold in your fucking funds. And the fact that they've been down and everything else is up at highs, you have nowhere else to fucking put money. So of course you're fucking buying those. Knowing full well that they're not really going to go anywhere. And it makes me sick, but it's like, yeah, that's why. And they're talking their book, and I'm still bearish on these. I think all of these companies, so not so much individually, but I think if you just do the IGV, and I think that's the best one to trade because it has all of these in there. I'm bearish on this, and I continue to be bearish on it. And I have some puts in here, and I'm not going to be adding them today, but I own some 90 puts on this, and they're doing okay so far. But I would wait for this thing to spike back up over 85 or 86, and I'm going to reload if I get a chance. Because I just think I think all these companies are on the verge of something relatively large coming. And my take is with all of these, and not just these, there's a larger number, is that they are going to need to cut costs, merge with each other, and in order to survive, because otherwise they're not gonna make it. They're not going to make it. And anyway, that's my take on it. And that's all I got. And so trade them tight today. Don't be a fool. And if you feel the need to trade, just keep it small and trade light. So have a good one, and I will be back